Okay. I'm going to try and skip through this today relatively briefly, relatively swiftly, given we've got the first cabinet meeting of the new government in 24 minutes, and that seems to me to be not a good one to miss. And so let me be relatively brief. I want to touch on the national accounts, obviously. I want to say something about gas and the minimum wage, and just give you a bit of an update on where our consultations are up to. The economy was weaker in the March quarter than was forecast at election time, and a number of the challenges that we see in the numbers today have become even more difficult since. We do have solid demand. We've got a tight labour market. There are some pleasing elements of today's national accounts. But we also have a snapshot of the really serious constraints and challenges that we have in our economy. And that's why what we see in the March national accounts is a weaker set of figures than our predecessors and the Treasury anticipated at budget time and at the time of the pre-election update. Growth at 0.8% was driven by household consumption, inventories and new public final demand, but it was still much weaker than what was expected for the corresponding period in the pre-election fiscal outlook. Consumption, dwelling investment, new business investment, exports and nominal GDP were all weaker in the March quarter than was anticipated by our predecessors in the budget and then by the departments at PFO. These national accounts are a glimpse of the mess that the former government left behind for us to clean up. You can see in these figures, even where the number on the surface looks relatively robust, is much lower in many instances than what the government was relying on in their forecasts in the budget. And that, for me, is really a defining takeout of the numbers that we see today. Obviously, we want the economy to recover strongly. Obviously, we want household consumption and other key elements of the national accounts to be as strong as possible. But even when on the surface, they might look stronger than they have been during the worst of COVID, they are still short of what the government was hoping for. And of course, the national accounts are notoriously backward-looking. And so if you think about what's happened in our economy since the end of March, inflation is higher. We've had an interest rate hike. Petrol prices are up 12% since the end of April. Wholesale electricity prices are up 237% since the end of March. Gas more than 300% higher than the average of the last couple of years. We do have labour shortages. We do still have COVID absenteeism, and the international environment has become more challenging as well. And so I think the summary of the national accounts, robust in parts, resilient in parts, but much weaker than what our predecessors were counting on in their budget forecast. And so consistent with what I've been telling you really for some weeks now. There is no point tiptoeing around these serious economic challenges. There's no point mincing words about the sorts of conditions that we have inherited. We've inherited high and rising inflation and rising interest rates. We've inherited falling real wages, and we've inherited $1 trillion in debt with nowhere near enough to show for it. Now, on energy in particular, this is an incredibly challenging set of circumstances, particularly for Australian industry, when you consider this spike in gas prices, which goes hand in hand with a spike in the price of liquid fuels and a spike in the price of electricity as well. This is unfortunately a perfect storm of conditions and challenges in our energy market. These are the costs and consequences of almost a decade now of a government with 22 different energy policies failing to land the necessary certainty to improve the resilience of our energy markets. This is the chickens coming home to roost when it comes to almost a decade now on climate change and energy policy failure from our predecessors. Our first responsibility in times like these is to implement our Powering Australia plan so that we can boost renewables and boost storage, but most of all boost certainty so that we can get that investment flowing that we desperately need to make our energy markets more predictable, more resilient, and so we can get more cleaner and cheaper energy into the system. This perfect storm of energy price spikes is doing enormous damage to our employers, to our households, and to our national economy. I will be discussing with the newly sworn-in Minister for Climate Change and Energy, but also the Minister for Resources, and no doubt in time with the various regulators as well, to make sure that we are staying abreast of these serious challenges in our energy market. I've already been briefed, of course, by the Treasury on what is going on here, but also we've seen AEMO come in with the price cap, and we've seen other players in the energy market make a contribution here. Obviously, Chris Bowen and I will be consulting closely with the various players in the energy market about these very, very concerning developments.